I'm Mike Capizzola from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a sector of the economy that's been growing throughout the pandemic, albeit counterintuitively, given the restrictions on movement and an uncertain job market. That sector is housing, and more specifically, mortgage origination and servicing. In fact, being confined to our homes for many months has made us think about what we want from them, and with many of us working from home and no longer needing to commute to the office, we've also been able to think about where we live as well. New home starts, existing and new home sales all bounced back dramatically following a sharp dip during March and April last year, as we can see in this chart. And not only did the housing market recover to pre-COVID levels, it went on to far exceed them. Where the housing market goes, the mortgage market inevitably follows. Mortgage lending in the USA during 2021 is forecast to reach as high as $3 trillion, driven by homeowners moving house, but also refinancing existing mortgages, as the Federal Reserve keeps interest rates at or near zero to aid the economy. Despite the jump in housing starts, supplies of homes in the USA remain tight, and prices have risen as a result. That means that existing householders have been considering their options and thinking about relocation. The high demand for new homes has also helped to drive up the price of essential construction materials such as copper and lumber. Lumber prices have risen 114.40% year-to-date alone. The Case-Shiller Home Price Index, which measures the cost of housing in 20 major U.S. cities, has been rising by double-digit percentages in recent months, enjoying its biggest gains since 2014. It's a good time to be in the mortgage business, and the stock we're looking at this week is in the thick of it. PennyMac Financial Services is an NYSE-listed business headquartered in Westgate, California, and has a market cap of $3.9 billion. As such, it can be thought of as a small to mid-sized player in the space. That said, the business is no slouch, with the company generating $506 million of pre-tax income in the first quarter of 2021, up by some 22% over the comparable figures in 2020. The mortgage servicing side of the business now administrates loans with a principal value of $450 billion on behalf of 2 million customers. There has been some notable insider buying at the company in the last week by main board director Farhad Nanji. Mr. Nanji has been a board member since PennyMac was founded back in 2012. He is also the co-founder of Boston-based MFN Partners Management, a value-focused investment management firm, having previously worked at High Vista Strategies and global consulting firm McKinsey & Co. He also attained an MBA from Harvard Business School. Both Mr. Nanji and MFN Partners have purchased PennyMac stock, with each buying 2,098,655 shares at an average price of $57.93 for a consideration of $17.3 million. PennyMac has a large number of institutional investors, with 80% of the stock in the hands of more than 600 fund managers and other professional investors that include BlackRock, UBS, Citi, and Norway's Norge, the managers of the country's trillion-dollar sovereign wealth fund. Mr. Nanji knows this company inside and out, so the fact that he has chosen this moment to top up both his own and his fund managers' holding in PennyMac sends a strong signal. The shares have been appreciating since the purchases were disclosed, rallying by 4.5% on Thursday last week to trade at just over $59 a share. However, that is significantly below the Wall Street analyst consensus target price for the stock of $80.57. True, some of these analysts have been trimming their price forecasts, but at current prices, there is an implied 36% upside in the stock, and presumably, that is the kind of opportunity that Farhad Nanji and his partners are looking for. We shouldn't overlook the fact that PennyMac Financial stock has risen by more than 113% in the last 12 months, printing 42 new highs as it did so, and that the all-time high for the stock of $70.99 was posted as recently as March this year. With the housing market showing few signs of slowing down and the economy on the verge of reopening, this is definitely a stock to watch closely from here. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions. And to find out more about our Trackstar IQ data, sign up for our free newsletter at investingchannel.com/Trackstar.